Hi, it's Stuart McPhee, and just coming to you from Dalian, China, of all places, and I'm joined here by one of my mentors, Daryl Guppy. I'm sure many of you have heard of Daryl before, and Daryl, thanks for joining us. And we're in China, and I think it's appropriate I speak to you here because I don't think I ever see you in Australia. So whenever we actually see each other, I think it's actually overseas, and I know you do a lot of work in China, so it's great to see you here and in this amazing city. And I think every city in China is becoming amazing because they're growing so much and all that sort of stuff. So thanks for joining us. I won't keep you long. I just wanted to ask a few questions. I guess because we're in China and you do a lot of work here, and we're all worried about this global financial crisis and recession talk and everything. How's China handling all this? It seems to be doing okay out of it all.
China is doing okay compared to other places. Yeah. But you've got to remember that a pullback of even just a few percent in terms of GDP is as significant as a pullback of a few percent in Australia. So Australia's talking GDP of what, 2.5%, whereas China's pulled back from 11% to 9%. That's a 2% drop. It doesn't sound much because 9% sounds much better than 2.5%.
Sure does, yes.
But it still has a significant impact on the Chinese economy. So the key factor in the Chinese economy is the strength of the domestic demand. That's what's really driving this economy, and that's the major political factor that the government has to consider. It has to keep domestic demand strong, keep the drivers strong, and it will turn away from overseas work to concentrate on what's happening domestically. Because overall, exports for China represent about 2% of GDP, 1.5 to 2%. Wow. So it's not that significant. No. But for us, of course, exports from China are a significant part of our economy.
You see everything made in China.
Well, Santa Claus is Chinese, so I understand.
Is it true? I mean, could China actually emerge out of all this as the leading economy in the world? I mean, people want to put their money here, don't they?
Certainly that's the case, and there are currently discussions at the moment to establish a yuan as a reserve currency. At the moment we have three reserve currencies: the US dollar, Euro, and Japanese yen. Now, to recapitalise world financial markets, we really have to draw on Chinese yuan reserves. So the current discussions taking place at a ministerial level in China are that, first of all, they want a seat at the table in the discussion of how to resolve this world financial crisis, and that part of the price of their admission is the potential for the yuan to act as a reserve currency. And certainly the West needs to be able to draw on other resources or other sources of funding to be able to restore liquidity to capital markets.
I actually heard an opinion today, I'm not sure if it's right or not, and you know, the US dollar has appreciated against so many currencies so well over the last 2 or 3 months. He put that down to people seeing the US dollar as a bit of a safe haven. As if you don't want your money in anything else, buy US dollars, it's stable, it's secure. So many people have been pouring their money into the US dollar as this safe haven, which potentially it may not be a safe haven, but people see it as that. Is that fair, do you think?
I would suspect that analysis is perhaps not 100%, in the sense that there has been a tremendous flow of money out of what we call emerging or developing markets, US money, back to the US. It's a flight of fear, not a flight of quality. And this is part of what's driving US dollar up at the moment. And counterpoint, the dramatic declines in AUD, in Euro, and Japanese yen, etc. These are, I mean, you've got 60% moves overnight. These are not things that are normal in currency markets. No. So when Americans get frightened, they go home and they take their money with them.
Yes.
And that's part of what's having a dramatic impact, for instance, in Korea, very dramatic impact in Japan, is the withdrawal of US funds from non-American markets back to the US, and this is happening in Europe. It's not just in Asia. So the strength is created by a return of funding to the US, not the diversion of funding from other places to the US.
Just to finish on China, like you and I both spoke this morning separately, and at the beginning I just said to the crowd how appreciative I was of the opportunity to speak here, and I think on the back of the Beijing Olympics and the financial crisis we now see, China's almost becoming, you know, it's on everyone's minds right now, and it's becoming the talk of the town, and that's why it's so fantastic to be here. And I know, you know, walking out of the hotel in the morning, all you hear is jackhammers and cranes, and there's building, there's real buzz, and I think that's really exciting to be here. Okay, enough on China. Just for retail, you know.
Enough on China.
No, you know what I mean.
This is where it's at. The rest of the world is collapsing and declining and so on.
And you know
this is what will take its place.
And it seems that way too. I mean, it really, as I said, the place is a buzz, and everyone's talking about China, and I think the forum that we're seeing here now, people want to invest in China and the infrastructure?
There's two ways. There is some demand for investment in China, but the primary demand is to take money out of China to invest in the West.
Yes.
And certainly the event we're out of today is, to a large extent, Canadian resource companies and other companies who are looking for Chinese capital to continue their funding. And this is in direct competition to what's happening in Australia. If you go to another event, not in Dalian, but in Beijing, then what you're finding is there are a whole lot of Australian companies there chasing Chinese capital, courting Chinese investors, because that's where the money is.